Thank you very much, Susanna, and thank you to the IEA for your invitation. I know, of course, I have friends and colleagues here, Chris, Karen, David, the rest of the team. You've done a terrific job. I think I've been able to sit in most of the sessions today, and I've really found them myself very, very, very enriching, very rewarding. And I think also they set up the scene very well for me because you've been talking about issues as diverse as investor education, investor involvement, to financial stability, and these kind of encompass what we do in IOSCO. So, and I do want to very much appreciate our collaborative engagement with the Investment Association, for instance, through your participation on the IOSCO affiliate members consultative committees. So you are an IOSCO member. So that's just great. Indeed, our discussions with the IA, more broadly with the AMCC, and even more broadly with the industry, have touched on the role that markets in general and asset management in particular can play in growth, in generating growth and jobs, and that aligns perfectly with the theme of the conference, but only if carried out responsibly. What does that mean? By managing the risks that are there in the space, not just investment management, but more broadly in the markets space. So what are these risks that I'm talking about? There are three. Risks to investor protection, risks to market integrity and efficiency, and risks to financial stability. Not surprisingly, these three are the objectives of IOSCO and of its members, addressing the three risks to investor protection, to market integrity and efficiency, and to financial stability. But these three objectives of IOSCO have to be seen in a broader context. They are not just an end in themselves, but they are a means to an end. And what is that end? By addressing these risks, and especially in a world that is and hopefully will continue to be global and where finance has to be global, these objectives, they together, once they're addressed, they can together generate trust. And this trust is the lubricant of financial markets, especially cross-border. So cross-border trust that is the lubricant for markets to function. So having a set of common standards, of recommendations, good practices, whatever you call that, is a global good that on the one hand mitigates risks, but on the other hand can also lower the cost of capital cross-border and thereby contribute to growth. And this is, of course, especially true during times of market uncertainty with evolving geopolitical dynamics, and we've, of course, been hearing about that earlier during the day. So that is an example where international organizations like IOSCO come in. So in these stress situations, IOSCO comes in as the connective tissue between our members, between jurisdictions, and I would say between the public sector and the private sector. So, for instance, during the stress, whether it was during the pandemic or the recent stresses that we have seen, what have we been doing? We've been having a very rapid coordination among regulators. We've been actually talking to each other, understanding, even informally. It doesn't matter whether they make it to newspaper headlines or not. We are not really about that. We talk about, so how are you seeing things in your market? How are you seeing things in yours? And how is it affecting you? How is it affecting the others? And so that rapid coordination, that has been very helpful, not only this year, but of course during the pandemic. That was a huge thing that we were able to do. And we were able to have consistent messaging across the world in terms of keeping markets open. Now we take it as a given. Things kind of seem to have worked out. There wasn't really any major failure, but I think it was not just automatic that it happened. Of course, that is a result of a lot of work that has gone in, but also it is the result of coordination, of communication that happens usually behind the scenes And here I am to tell you what was actually going on during that time. And of course, we focused during those stresses on the IOSCO policy agenda, on the so-called NBFI, non-bank financial intermediation, which kind of means different things to different people, but we can get around that. So there was a lot of work that happened with regard to, and Karen, the discussion that you were having with Lee. So in terms of what happened with regard to margins at that time, were those margins things that people could not predict, and therefore did something need to be done? Yes, a lot of work has gone in terms of the work on margins, or with regard to financial market infrastructure, and definitely with regard to funds. So that's, I'm starting with periods of stress because we seem to be, for the large part of this year in the periods of stress. But IOSCO's role is, of course, even more during steady state, where we bring together over 130 jurisdictions, the regulators of which together regulate more than 95% of the world's capital markets. What do? We set standards, but we also promote information sharing, the kind of thing that I was talking about, but in a more steady state, on a more steady state basis. We monitor implementation of the standards that we set, and we help in capacity building and in development of markets, because our membership is so diverse that many of we might be talking about very, very sophisticated stuff with regard to CCPs and default losses, non-default losses. On the other hand, some of our members may not have a stock exchange. So, we try and help out, and that's where you have the affiliate members consultative committee. That's where members like the Investment Association come in, so that we are able to partner and be able to develop markets where it's needed. In a sense, I was struck by two things that when I was looking at, the Investment Association's objectives and so on. So, at some point you mentioned that you do policy, you do training, you do events, and you do data. So we do a lot of that. I will get to data. Don't worry. So that was that. And the other thing, I saw the Next Gen Fund Data Platform written there. And Next Gen happens to be also the name of our capacity building program, nurturing excellence through growth, education, and networking. And that is for the over 110 emerging markets that we have inside IOSCO. With that, let me move straight to themes that may be of the most interest to you. And on that, I will touch upon our work with regard to liquidity risk management of funds, of open-ended funds. Where are we with regard to private funds? Where are we with regard to data that I mentioned, and leverage? And so, as you can see, it's difficult to, to say that all of these sit very comfortably in just one of the three buckets that I was talking about: investor protection, market integrity, financial stability. But we can see that financial stability is quite an important aspect of what I'm just going to mention. So, as I mentioned earlier, we've done quite a bit of work, and along with other collaborative bodies, our sister standard-setting bodies based in Basel, like the CPMI, the Committee on Payments and Market Infrastructures, the Basel Committee, and of course with the Financial Stability Board. And we've come out with recommendations with regard to margins, cleared, uncleared, initial margin, variation margin. I'm just mentioning that because that was quite a key driver during the pandemic period. On liquidity risk management, we are really delighted that together with the Financial Stability Board, we were able to complete the policy work on open-ended funds. Just a few years ago, people had different notions about open-ended funds and, the kind of havoc that they can create and things like that. But I think we were able to get to a good place, which involved intense analytical work. It involved consistent communication with other stakeholders in the public sector, central banks and the treasuries and so on, but it also involved intense engagement with the industry. We had a large number of roundtables, a lot of consultation, and we were able to, together with the FSB, finalize the work. The Financial Stability Board revised its own policy recommendations with regard to structural vulnerabilities in open-ended funds. IOSCO finalized its guidance on the use of liquidity management tools. And last month, we updated our 2018 recommendations on liquidity risk management. And we developed additional guidance. And we published that. That's not a surprise because you were engaged in the whole process, but largely, as you know, that covers essentially on open-ended funds, the asset and portfolio liquidity on the one hand and redemption terms on the other, the design and use of liquidity management tools and of other liquidity risk management measures by open-ended funds, and the disclosure to investors. And that demonstrates cooperation on an international stage, not just between securities regulators, but also with prudential regulators, with central banks, financial stability authorities. And we will continue the momentum with the review of the implementation progress by the FSB and IOSCO in 3 years' time. Coming quickly to private finance, again, IOSCO has been paying a lot of attention on this. And in 2023, we had published the thematic review of emerging risks in private finance, because according to some estimates, we know different numbers get talked about, but broadly speaking, private assets are in the range of around $14 trillion. And that is a huge increase. It continues to grow. But what we are now focusing more on is private credit, because that is also growing. And that seems to, so the IMF Global Financial Stability Report of last year shows private credit emerging as a key lender to middle market firms with riskier profiles, with private credits around $2 trillion in combined assets, including dry powder. So the long-term financing to such firms can indeed fall through cracks, and because they can be too large or risky for traditional bank lending, yet too small for public markets. For us, where the funding comes from is not our main policy driver. But it is a part of our mandate to see wherever the funding is coming from, whether this creates areas that warrant regulators monitoring. For example, the potential fragility of borrowers in this space of private credit, a scale that we don't really know. The exposure of pensions and insurers to private credit. The growing share of semi-liquid investment vehicles, as well as the push into the retail market space, and the potential for multiple layers of leverage, and the potential for stale or inaccurate valuations. So we've done some work around that. We are revising our principles on valuations. That does take into account private markets. Coming quickly to data, I think what I just mentioned about not really knowing even the size and scale of some of these things does create a hurdle in terms of understanding and in terms of unlocking the power of markets, because they need to be well regulated and supervised. And so what we've been doing is we have been, of course, talking about the lack of data, but now we are determined to contribute to a solution. So which was rolled out earlier this year. It's just the start. But if you go to our website inside IOSCO, you will see an investment funds statistics dashboard. Now that is the first of its kind. What we've done is we have used publicly available data as well as data that regulators have on investment funds. And we've published this dashboard offering, and you can click on it, play around with it. It gives you a comprehensive view of the industry, offering detailed data into individual jurisdictions, or if you go to a regional basis, you can go to the region, and then you can look at the types of funds, what's the extent of leverage, gross versus net. You can look at even strategies. So in that sense, it is something that we have tried to take a first crack at. We've been doing some degree of data collection in the past, but we put it together in a way that is more digestible. And this is a place where we would like to be able to collaborate even more with you, with the investment association, but also more generally with the industry and the affiliate members consultative committee, because that could help with policy formulation and risk assessment during turbulence. It could help with good policy making, and it could help with addressing some preconceived notions that might not be always completely right. With that, let me move to leverage. We know that leverage can be an important, kind of precipitator of crises. And so, the interesting thing there is that we talk about leverage in, again, the term NBFIs, so non-bank financial intermediation that can include all sorts of entities. The interesting thing there is that the finding that was there in the financial stability board's work, where we'd also worked together with them, was that the extent of leverage is significant in the NBFI sector, and it is pretty much similar in scale to household debt, but it is extremely unevenly distributed within the sector, because a large part of the of that leverage is not sitting inside insurance companies, pension funds, or investment funds, but it is sitting in some other so-called other financial intermediaries, such as broker-dealers, hedge funds, finance companies, holding companies, and securitization vehicles. So again, detailed work on leverage is really important to be able to address a key risk on this area. And again, this is something that we would like to be able to work with you on. So I've covered most of the things that are relevant to, I hope, to the investment association and to people attending this conference. But I do want to very quickly touch upon the other objectives, the market integrity and efficiency objective and the investor protection objective, because in part because they are not really, buckets that are neatly kind of separated from each other. So for instance, if you talk about market efficiency, market integrity, we've been doing quite a bit. We are aware of the work that the IA is doing on fund tokenization. Again, tokenization is an important priority for IOSCO itself. And so exploring the use of digital tokens to represent and manage assets, aiming to understand and implement the benefits of tokenization, including increased liquidity, accessibility, and efficiency for financial institutions. We've been doing some work within IOSCO. We have a fintech task force. What we found is that tokenization in capital markets is at an early stage of development, and that is underscored by the limited scale and scope of use cases that we've observed. Through stakeholder engagements, what we've learned is that this limited use of tokenization is because market participants are still in the process of playing around, of experimenting and building the infrastructure to support the potential to scale. And that currently there is a lack of interoperability, not just across different DLT networks, but also across tokenized and traditional capital markets. So we're looking at, are the risks in tokenization, how similar are they to the underlying markets, or does tokenization per se introduce further risks? And then talking about technology, we are also continuing to work on AI in securities markets. And again, we had done our work in 2021. Now we're looking at how is the world of generative AI changed in terms of its application by the industry. Very quickly on investor protection, again, that has been a very important theme for us. We published a roadmap last year. We've published reports on copy trading, on digital engagement practices, poor digital engagement practices, influencers, and potential conflicts of interest. And I know that there was previous discussion with regard to investor education. That continues to be an extremely important theme for us. We have every year a World Investor Week, that we conduct in October of every year, which we will be doing this year as well. So I will conclude by saying that we are, of course, living in uncertain times, but then properly functioning financial markets, they are meant to deal with uncertainty. That's what markets are supposed to factor in, to allow capital raising on the one hand and helping customers with proper financial planning, price discovery, hedging on the other hand. Well-regulated capital markets allows this proper functioning to happen. And what is well-regulated is clear, addressing the objectives of investor protection, market integrity, and financial stability. And all of this is a means to an end, which is that markets that operate with integrity and efficiency, especially cross-border, markets that have sensible innovation and allow capital flows will help with creating growth and jobs. And that's the theme of your conference. Thank you very much for your attention.
Just very quickly before you go, obviously fraud has hit the headlines. What is IOSCO doing to try and protect retail investors?
Thank you. So I mentioned about the different work that we do with regard to investor education, the different reports that we have published with regard to fraudulent practices and so forth. But to your point, what I would like to mention is that we've come out with a very new initiative, and that is called iScan, or the International Securities and Commodities Alerts Network. What it does is that in different jurisdictions, when regulators find that these are the suspicious entities and so on, and they want to alert their investors, whether they are in Hong Kong, whether they're in Australia or Canada or wherever, but they put that on these alerts on their websites. What we've done is we've developed a new tool that is able to aggregate all of these together almost in real time, and then it allows the generation of APIs so that it is something that is machine-to-machine readable. So it is something that I would very strongly encourage members to have a look at the IOSCO website, because what that does is that it allows financial entities to actually just get that information and make sure that they are not actually ending up unwittingly or wittingly selling these products to investors in their areas. We're also working with search engines and platform providers, and so far we've had a very good response, and we do hope that this will be somewhat of a game changer with regard to the fraud that people might be subjected to, especially on a cross-border basis.
Okay, Tajinder Singh, thank you so much for your time. It's great to have you here at the conference.
Thank you.
Thank you.